Hi, everyone. Here we are for another weekly recap with the Defiant print team. Thank you all for joining us. Once again, it was a wild week for crypto, and we're here to cover all the ups and downs. Some of the biggest news were the New York Attorney General calling ETH a security, and Silvergate being shut down and dragging all of the banking industry down. There's today news and concerns about Silicon Valley Bank. So, TradFi also running into the same type of bank runs that we saw in CeFi earlier, or I guess last year. No YYC today, somebody's asking. No, yeah, sadly, he won't be able to join us today. He was traveling, and now, yeah, with travels and getting back, he wasn't able to make it. But next week, he will join us for sure. So you need to come back next week as well. So yeah, let's get started. I guess, yeah, let's start with ETH being a security potentially. Alex, do you want to go through that, through the latest on that?
Yeah, so this came out in a lawsuit filed by the New York Attorney General and other enforcement action, and this one was against which company was this against? KuCoin. So in the state of New York, any crypto exchange has to be licensed with the state. It's called a bit license. It's the reason that I, as a New Yorker, have far fewer options than most other Americans in choosing which crypto exchange I can use to buy and sell cryptocurrencies. KuCoin is apparently not registered in the state, but folks with the Attorney General's office were able to, from New York, to buy and sell crypto using KuCoin. So it was, in their words, operating illegally here. Now, the thing, and this is, they've brought similar enforcement actions to other crypto exchanges in the past. That's not really the big deal here. In the lawsuit, they say separately that KuCoin actually isn't even an exchange. It's a securities broker dealer. And they know that because on the KuCoin platform, you're able to buy and sell securities such as Luna, UST, and Ether. Now, the logic behind classifying Ether as a security, if you read through the lawsuit, they're going by the Waldstein test. So you may have heard of the Howey test, which I suppose is the federal version of the Waldstein test. But the New York's highest court held in a case going back to, I don't know, 1986 or something, any form of instrument that used for the purpose of financing and promoting enterprises and which is designed for investment is a security. And so in the lawsuit, the New York Attorney General's office argues that ETH satisfies this test, that its ICO was used to raise funds to develop the Ethereum network, that Vitalik and the Ethereum Foundation retained large positions of ETH that they continue to use to fund ETH's development. ETH was also designated as an investment, and it continues to be referred to as an investment on Ethereum Foundation's website, and ETH is used to generate staking rewards for investors. And furthermore, it's used to promote the Ethereum enterprise because ETH is needed to process any transactions on the Ethereum network. So that's the argument that they make for why it's considered a security. Now, this isn't the final say on this issue, obviously. I mean, at the end of the day, the former SEC chair said that it wasn't. The current SEC chair says that it does. This CFTC chair says that it isn't. It's like, until Congress weighs in on this,
it's just one more opinion.
It's just another opinion. So, but I mean, obviously this had a huge impact on the markets. I checked this morning, and Bitcoin and Ether were down almost 10% each. I mean, Ether's back to trading around mid 1300s. It had been around 1600 over the past several weeks. So, it's just another shot at the industry from one of the more aggressive regulators in the country. I mean, New York Attorney General's office is right behind the SEC in terms of enforcement actions that it's been bringing.
And when you say so it's under Congress's purview to determine whether ETH is a security. Is that how it works? I mean, I know Congress it's like the ball. I was talking to people at ETH Denver, and the ball is in Congress's court in terms of providing clarity about crypto regulation. But are they also the ones that determine ETH's classification as a security or not?
I mean, not exactly. So the SEC will say the law is clear. The SEC says we already know. Like, you don't even need to go wondering. They're all securities except for Bitcoin, according to Gary Gensler. So, but again, that's an opinion. That's not exactly binding, right? So, like, he can bring an enforcement action alleging that somebody is, violating securities laws because, they did X, Y, and Z with a certain token, and that token is a security in their view. But then, whoever is getting sued can either roll over and just kind of pay the fine or whatever it is that the SEC wants from them, or they can fight back. And that's exactly what's happening with Ripple, right? So when the courts weigh in on that case, assuming that neither side settles, when the courts weigh in, that'll actually give a lot of clarity on that issue. Now, now, whether that settles it for every other cryptocurrency out there is another question, right? Like, the ruling on that case could be narrow enough that, everybody else is still kind of left in limbo. But that's like, everybody's eyes are on that one, because that's going to go a lot further than, whatever agency head saying, I've got an opinion on this.
Gotcha. Yeah, I mean, I'm kind of speed running my understanding of the legal system as crypto endures pressure from it. So I'm just trying to understand. Yeah, but I do understand that law is a kind of a living, breathing, developing thing, and so if there's precedent to call asset like XRP a security, I suppose that makes it easier to call Ether one, if that's determined in court.
Right. And like, part of the issue is that the SEC isn't just coming out and saying, like, clearly, Gensler is saying, I think, if you really look at it, all the ones besides Bitcoin are probably secure. But that's not the same as the SEC kind of, putting in writing, here's officially what we think about all the cryptocurrencies. It's that's the complaint from the industry, is that every whatever it happens to think about crypto is coming out piecemeal, one lawsuit at a time. And that's, it's like, okay, well, you sued them. What does that mean about my, project or token?
Totally. Go for it, Tammy.
All right. No, it just seems like both the SEC and in this case, the New York Attorney General are, pinning their argument on whether there's the expectation of profit from the work of others. So that's the Howey test, and it looks like this is the same bar that this other test is looking at. I don't know, like, for me, maybe, I mean, it definitely was the case at, back in 2015 when Ethereum was, a much smaller project, and it really did depend on Vitalik and Gavin Wood and just like a few others developing the protocol. But I think it's really hard to make that argument now. I don't know. It's I would guess if they really did take this to kind of the highest courts and argued, like, the Ethereum community would have a really strong argument that right now Ethereum is sufficiently decentralized. Like, I really do believe it shouldn't be considered a security under those parameters. Like, it's not like there's a company running the Ethereum protocol or even a small group of developers. It really is this, just, global community that's running Ethereum nodes and writing code, and then validators have to implement the code that others are writing. So it's it is a decentralized global protocol. So
Yeah.
I think it's hard to make that argument now. Like maybe you could have made it at the very early days of Ethereum.
Yeah, I think that is like the hard thing too, is that is basically what you said. It's like what do you do in the interim? Like how do you, from my understanding, there's no kind of structure which like legal structure which accounts for this kind of progressive decentralization that these networks go through, where it's like I don't know, how do you account for that progression? Because if it looks like a security initially and then becomes less like one, like if someone buys ETH now, it's maybe less like they're buying a security. Like how do you account for that legally and allow these systems to emerge?
Yeah, like what is the official definition of decentralized?
Mm-hmm.
Right.
Mm-hmm.
That's like I don't know quite how I would define that word. I can talk about it in theory, but where does something cross the line?
Yeah, totally. And yeah, I mean, we could talk. I think like the Centrifuge guys did like a traditional equity round, but they've now moved into, like, they said they're pretty fully decentralized. So I mean, I think there's a lot. I mean, it's just so. I mean, like you said, it's so messy, and like understanding what decentralization means is like very complex issue. And obviously, crypto has its own kind of issues with governance and establishing solid governance, which is really decentralized. So
yeah, and here, like you were saying before, Alex, how the market has reacted to the news. So we're seeing here on the Defiant terminal, which is accessible to paid subscribers of the Defiant, how ETH has really plunged on the news from about 1,500 to 1,400. And here we have this chart comparing Bitcoin and ETH versus the S&P 500. And yeah, ETH is down 10%. Bitcoin is down more, curiously, 12%, compared to a less than 2% drop by the S&P. So definitely crypto underperforming, likely on at least in part on these news. So what's next with this story? Is it just, do we take it as okay? Like here's one opinion that ETH is a security, but can exchanges just keep running? And I don't know, like what are the practical implications of this?
It's not clear to me that there are any just yet. I mean, Coinbase, for example, will, say every chance it gets, we don't sell securities. Like whatever securities, right? I mean, that doesn't have anything to do with us. We don't have any securities in our platform. I'm not aware of anybody having trouble today on Coinbase buying or selling ETH. So, clearly the exchanges don't think like, oh, well, the Attorney General said it's a security. We've got to really be careful about ETH now. So, no, in the short term, it doesn't seem to have any practical effect. And even if the New York Attorney General's office was to succeed in this lawsuit, I mean, what it's seeking in this lawsuit is for KuCoin to stop operating in New York and for the company to use, I forget what the technology is called, but essentially to make sure that its website and its app aren't available to people accessing the web from the state of New York. So, that's the goal of the New York Attorney General's lawsuit, right? It's not like if they win, then exchanges have to remove the ETH from their platform because it's a security.
Yeah, that makes sense. Yeah, it's not actually the focal point of the lawsuit at all. Anyways, They're not like going after like the Ethereum Foundation or something.
Right.
No, but it is notable that they go out of their way in the press release about this lawsuit to mention that it's one of, if not the first, lawsuit to proclaim that Ether is a security, or lawsuit from a regulatory agency at least. So
they wanted to
they
make a
know
splash.
that they know that what they're doing is a big deal. But
well, yeah, I mean, someone. Cammy, my bad.
No, go ahead.
Okay, just like I did see a Defiant alum, Brady Dale, just saying like maybe the AG is trying to get in on the next administration, and which the administration I think came down this week also with a proposed 30% tax on miners. So I think there may be like I'm not super familiar with how kind of politicking works from administration to administration, but there may be. I don't want to be speculative, but there may be some positioning in terms of, I took a hard line on ETH, just like you, kind of thing.
Right.
So,
right. Yeah, that could be. But yeah, I mean, I think practically right now, KuCoin is the only kind of real affected party. And I think, it's the bottom line is they didn't have, they weren't registered to operate in New York. And that's not the case with Coinbase or Gemini or kind of the major exchanges in the US. So, in that sense, the practical impact, other than for KuCoin, isn't that big. So yeah, I guess markets reacted very, very dramatically, but I don't see like the real kind of. I don't see that the impact is as big as the market is showing, I guess. So we'll see what happens next, and whether exchanges can fight these rulings and to get more clarity around where we stand with Ether. But once more, we're stuck in this kind of maze of regulators and agencies in the US, and they each have a different opinion and a different way about regulating this industry, and it makes things really hard for people dealing in this space. All right, so let's go to the next big story of the week, which is what's happening with Silvergate. So we covered this story last week, and we're about to put out a follow-up now, but still worth going over it. It is kind of the big news. So Alex, you're covering kind of the latest on that. We're putting out your story today. So what happened here?
So there was a run on Silvergate's deposits. Something that's worth noting is that Silvergate was able to close in an orderly fashion. It's not like the run on FTX deposits where FTX couldn't meet customer withdrawals because it just didn't have the money. Silvergate actually it's spoken to a professor who is an expert in the banking industry a couple of weeks ago, actually, when I was looking into some of this stuff. And she mentioned that Silvergate was made to hold more liquid assets than banks typically do because of its exposure to the crypto industry. So instead of a lot of its assets being in loans, they're actually in cash and easy to sell securities. So when there was a run on the deposits, it was easy for them to either just give the cash to the customers who are withdrawing, or to convert their securities into cash and sell those off. So what could have been worse had their deposits, or had Silvergate's money been held in something that's less liquid, is actually a kind of it's like a collapse that won't really end up hurting people, at least in the immediate term. What will happen though is that crypto is going to be left without its primary banking partner. So there are two major banks that have serviced crypto Silvergate and Signature Bank. When issues at Silvergate came up last week, they put out a financial statement in which it basically said everything that's happened since FTX leaves us unsure whether we're going to be able to continue to exist. We are less than well capitalized, I think was the phrase. A lot of crypto companies, Coinbase being one of them, severed ties with Silvergate out of fear that exactly this would happen shortly thereafter. So the crypto industry now, the bigger players have moved what they held at Silvergate over to Signature, but then they don't have too many other options, and that's kind of what I've been looking into over the past day. So when FTX filed for bankruptcy, in one of their documents, they listed their banking partners, and those include some big names, JP Morgan, Bank of America, others that are much smaller. Folks might have heard of Moonstone Bank. That's actually a small community bank that serviced farmers out in somewhere on the West Coast, if I remember correctly, and basically it rebranded itself to Moonstone so that it could better service FTX and kind of changed up its business model. Silicon Valley Bank was one of them. That's, if anybody's seen the headlines today, Silicon Valley Bank is also having a lot of trouble right now, although that's not related to the crypto industry, to be clear. But I was speaking to somebody who didn't want their name in the paper, so to speak, but they're kind of close to all of this, and they were of the opinion that the bigger players that have a lot of money, they're not going to have too much trouble getting banked and finding partners. It's really the smaller ones that that might not be able to survive as their options for just processing payments and all that start to dwindle. But that's really the latest with Silvergate.
So can you clarify what prompted the bank run? Like, why were there concerns about its balance sheet?
Well, FTX was one of its largest customers, right? So after everything happened at FTX and the general kind of fear over the crypto industry, I think it took a big financial hit from that. And when it revealed last week that it was, you don't, somebody had said online, you never want to see a bank say that it's less than well capitalized, right? That's really not good for a bank. So when Silvergate had said that last week and said, we're trying to figure out right now whether we're going to be able to continue operating, everybody's like, okay, we got to get our money out of this before it actually goes belly up.
It's like a self-fulfilling prophecy. Whenever there's concern about a bank going under, everyone will take out their deposits, and then the bank will effectively go under. So
exactly,
when there's a crisis of confidence in a bank, it's just very hard to gain it back. And it's why we're seeing just like the entire banking financial industry sector in the equity market being so affected here. I was looking at the trending tickers on Yahoo Finance, and so it looks like Silicon Valley Bank stock, the next kind of bank that is having issues. There's this statement today that it's effectively being shut down. And there's this other bank that's securing insured deposits. So, and so the stock, Silicon Valley Bank stock, was halted in pre-trading today, but it was down 60% in after-hours trading, it looks like. So that's halted. That's why you don't see a change today. But then, like the biggest moves down in the equity market are banks. So First Republic Bank, SoFi is like a fintech, and then Signature Bank which you mentioned, down 23%. So yeah, it's just like sending ripples all through this industry, especially kind of concerns about the smaller banks not having the assets to meet deposits.
Yeah. And I mean, big context that I saw kind of circulating on Twitter is that like banks are, from my understanding, they have a lot of bonds on hand, and those bonds have become significantly less valuable as rates have hiked like super fast over the past year. So like, whereas they could typically sell those securities and meet withdrawals, like now they're massively underwater on all those bonds. So I mean, that I think that's particularly what's exacerbating this problem, is that like the context of the rate hikes, and that these banks are I mean, holding just much less valuable assets. So yeah, I don't know. I just think that's important additional context.
For sure, yeah. And you know, for crypto, it matters because it's kind of these smaller banks who maybe took on riskier positions, the ones that usually, you know, bank crypto. So you get into this problem where you have less options as a crypto company to bridge over to fiat. So we'll see. Yep.
Yeah, because I mean, I think, it's like, I think Silicon Valley, whatever. I think we already went over this, but I think like Union Square, which has Ventures, which is a VC firm, which is invested in Coinbase and a bunch of other crypto companies, like they're advising their portfolio companies to pull their money from Silicon Valley Bank. So there is like, I think there's, I don't know, people are calling Silicon Valley Bank like crypto friendly. I'm not sure the exact connections to crypto projects, but
it was one of the banks that serviced FTX, so
really,
you know, it had some connection to the industry, but you know, if whether that's a substantial portion of its, you know, customer base, it's not really clear to me. I haven't seen anybody suggest that the story of Silicon Valley Bank's issues is a crypto story. Really.
Right, fair enough. Yeah, it's like a tech story, maybe better characterized as that.
Yeah, but I would guess, you know, they did have I don't know, I don't know how many, but they do bank startups in tech, and so you know, you can assume that a portion of those will be crypto companies.
Totally.
Yeah. And yeah, I mean, just like anecdotally, investors in the Defiant were also reaching out, being like, you need to take your money out of SVB. So everyone's kind of, this is kind of the next bank that people are worried. Well, I mean, worried about, and this morning there's this statement that it shut down. So it's crazy. It's like the same kind of thing we saw with CeFi last year happening in traditional banks. Like you would assume holding treasuries is a safe bet. So let's move on to the next story. We have this happened earlier in the week, and you know, I started off saying that it was a week of ups and downs, and we had GBTC shares jump earlier this week on this hearing, and the idea is that there was this hearing on GBTC arguing why it should be an ETF, and it looks like the judges were at some point kind of were favorable to this decision, or to their arguments. So that was seen as a good sign by the market. Alex, you covered this story.
Yeah. So for folks who don't know, GBTC is, you know, it's like a way for institutional money to get into Bitcoin, right? It's a trust. You can trade in your Bitcoin, and in return you get shares of the Grayscale Bitcoin Trust that you can then trade separately, and those shares are, you know, they're backed by Bitcoin, so they represent Bitcoin. And it's a way for institutions to get exposure. And for most of its history, GBTC shares have been trading at a premium to the underlying Bitcoin. So they were worth more than the Bitcoin that they represented. And that was because they were the only game in town. The price kept going up. It was kind of a bubble, but that popped when other competitors entered the scene. Now, investing in GBTC, trading in that Bitcoin in exchange for shares is kind of like staking Ethereum today, right? It's a one-way street. Once the Bitcoin has been traded in, you can't pull it back out. It's effectively stuck in there. And that's part of the reason that GBTC has been trading at a severe discount to the underlying Bitcoin since 2021. That discount has been as bad as almost 50% at times, where it's worth half as much as the underlying Bitcoin. I mean, if you could just swap the shares out for Bitcoin, then it would be trading at par, because, same idea with like staked Ether and Ether, right?
Mm-hmm.
So Grayscale, the parent company, wants to convert the trust to an ETF. It would still, allow people to gain exposure to Bitcoin in a more traditional way, but it would also make it possible to redeem the shares for the Bitcoin. It'd be great for anybody who holds GBTC now, because it's trading at this discount, right? Like immediately the value of their Bitcoin would jump, whatever percentage that gap is. The SEC has said, no, you can't turn this into an ETF. Grayscale sued. This week, the SEC and Grayscale went in front of a 3-judge panel to argue their case. And really what Grayscale is asking for right now isn't like, hey, judges, can you force the SEC to let us turn the trust into an ETF? It's, hey, judges, can you force the SEC to take back its rejection of our application? Mm-hmm. So if Grayscale succeeds here, that rejection is null and void, but the SEC, the ball is back in their court. The SEC would still have to, reconsider Grayscale's application and then decide whether to approve or possibly deny, but it would have to find a different reason than the one it provided, right? And the reason it provided initially was, well, you don't have enough infrastructure in place to ensure that there won't be market manipulation and investor protection and what have you. Grayscale is arguing, but you had just approved a Bitcoin futures ETF that uses the exact same, method that we would use to ensure that there's no market manipulation, et cetera. So, why was that good enough in this case, but not in our case? And the judges seemed receptive to that argument. I mean, they try not to show too strongly, I guess, that they're leaning one way or another. But when the SEC attorney came up to make her case, and they had a lot of questions for her. So, all of that was taken to suggest that when they come back with a ruling in a couple months, none of this ever happens promptly, unfortunately, that they're going to, as Grayscale hopes, send it back to the SEC. Okay, you've got to reconsider their application.
Yeah, that's big news. That'll be interesting.
Yeah, I mean, $14 billion worth of Bitcoin is locked up in that trust. It's
Totally.
So much.
No, people overloaded their I at one point put in some of my IRA into GBTC, so I have a vested interest in this court case.
Nice.
Anyways.
Yeah, I just think it's so odd, like the SEC's just refusal to approve Bitcoin ETFs since forever. Seeing as there are so many instruments that are riskier for individual investors and retail. Like retail investors can buy GBTC right now, and the instrument as it's structured right now is a lot riskier for retail than a regular ETF because of the reasons that Alex was saying. Because it's a trust, the shares of the trust trade at a different price than the underlying assets. So institutional investors are able to come in and buy GBT shares in kind of when in the primary market when they're like first issued, and then they sell them off to retail at a discount or at a premium wherever those shares are trading. So that's a much worse instrument for retail than just a straight up Bitcoin ETF. So it's mind blowing. Same thing with futures. Like I guess like that's because that's the CFTC that regulates futures, and so it's not actually the SEC who is approving those instruments. I understand, so it's not. But still, like a futures instrument is a derivative. Like it's just a lot riskier than just buying a Bitcoin in the spot market.
Yeah.
It's just, I don't know. It's crazy to me that this is still a fight that is happening.
No, that's a great point. People were printing money off that GBTC trade, or like the institutions. And yeah, it's funny that
then they
negating
had a
that
first
trade.
crack at it, and the premium for the GBTC shares to Bitcoin was as high as like 130% sometimes. That's insane.
Yeah, you're making that
Made
like
so
6
much
months,
money
I
off
think.
of it.
Yeah. It's like a 6-month redemption, and then you can redeem your shares. So
I think that trade going from premium to discount is what screwed over
3 arrows,
Three
right?
Arrows.
Yeah.
3 Arrows. Yeah.
I think they're making, because I remember Suzu on a podcast, he was even saying like after it had gone negative, he was like, no, I think it's a good bet. It's going to go positive or something, and it definitely hasn't. So
So and then let's see, what other big stories did we have this week? We had we were at ETH Denver over the weekend, and so Owen was there covering the main themes of the conference, and surprisingly, we have this in the headline. This is the conference of the Wild West, kind of finance in the Wild West at Denver. But it looked like there was a lot more concern about being compliant. There were, a lot of projects there were focusing their efforts on how to be compliant and to not, to fall in line with regulators, especially in the U.S. So, Owen, do you want to tell us about the story, what you saw there?
yeah, I mean, so at a high level, as we all know, crypto has been the land of rebels, and wants to have its own rules. But it was something I noticed at the conference was like a lot of people, we had a booth, and a lot of people came up and were kind of pitching various projects, and they were talking about compliance like it was this great value add, which definitely never heard before. So I just thought it was just very interesting that as a change in tune, and given all the regulatory pressure that we saw in the past year or so. So I mean, that's the super high level gist of the story. I met a former lawyer who is working on baking in like accredited investor and qualified purchaser, which are both designations of kind of like the ability to participate in certain investments. Like he was working on bringing those on chain as much as possible through Polygon's new ID, which I think launched either last week or the week before. And then similar people were playing in ways of like doing the same for KYC. So you could potentially have this, have this accreditation that you were KYC'd, which dApps could use to whitelist users. So I think there's people are playing in that area in a way that it's kind of like a new and almost, this is my opinion, people like push back a little on this on Twitter, but like I think people are playing in this area where compliance is almost hot, although not sexy, but hot. And
Right.
so yeah, and I mean, we saw also Moloch DAO developing that new ZK powered crypto mixer, which I thought was like great support for the thesis that that compliance is becoming this important aspect of crypto. And it makes sense. I mean, crypto is at that point where it's like, people are it's this thrust to put it in the hands of the average consumer, and that means we're coming up against the real world and regulate rules and regulations. So I just think yeah, that's a trend I saw, and I wrote a story about it. So that's what happened.
Nice. Yeah, I think it's inevitable. Like we've seen so much regulatory pressure in the past few months and last year. Well, we were just talking about what happened with KuCoin. So I think for this industry to continue growing, it will have to find ways to comply to regulators in the US and elsewhere. I think it's interesting that there are ways to do it even in DeFi, where you kind of assume that that actually is the Wild West, like where you're just dealing with smart contracts and it's non-custodial and everyone's anonymous and so on. But this Moloch DAO mixer is using the tech to actually even make DeFi just compliant and be able to whitelist some addresses, which I think it's again, like it'll allow crypto to thrive and with kind of less concern about kind of everyone going to jail, which it's important.
Yeah, it seems like ZK proofs are a huge part of all that, where I think in the Moloch DAO solution, you're able to prove you're not on a list of sanctioned wallets without revealing what your wallet address is. So I think a lot of the solutions have to do with that, or ways where you can, I don't know, kind of selectively reveal information. I guess like KYC, it's like it's kind of a yes no thing, but maybe there's a way where, I don't know, there's a way to still maintain privacy. I'd have to think about that a little more. But
I think that's exactly how crypto should be dealing with regulations, is using the technology to its favor. Like I think we have the opportunity to comply with different anti-money laundering laws and so on, using things like CK proofs. So we don't have to KYC and use kind of the old ways of proving that we're not kind of laundering money. We can actually use this tech to do that and maintain kind of a trustless way of transacting without having to do KYC, but at the same time complying with regulations. I don't know if regulators will be able to see that, though. It's like, oh no, like we're using CK proofs to show that I'm not on this list. I don't know if that will be enough. I hope so, but I think it's a real kind of smart and interesting way of dealing with regulations. I think it's the way forward for DeFi.
Yeah, it's gonna be, the education effort will be tough, just with explaining ZK proofs. I think will be big.
Yeah, and then I think we're almost at time, but let's go over kind of the other big themes of the past few days. We saw a lot of news around wallets with this new EIP for Ethereum. and Coinbase wallet and this Instatap wallet. Oh, and you covered a lot of this news. Do you want to give us kind of the overview?
Yeah, I could do a speed run. So basically, last week at WalletCon, which was like an 1,000-person event, which preceded ETH Denver, ERC 4337 was released, and at a super high level, that kind of it allows like typical Ethereum addresses called externally owned accounts to be controlled by smart contracts. And so there are a lot of things coming downstream of that, which, we saw with a release even this week. But basically, it allows a much higher degree of programmability around like the account experience. So like things like, Instadap announced the ability to pay gas fees in USDC this week. And so if anyone who's ever used a wallet, they understand that, people can even get trapped when they don't have a certain asset, and they can get, if they don't have ETH to pay for a transaction on ETH, they can get trapped and not even be able to move. And there could be other assets on that wallet, and you'll have to like beg your friend to send you ETH or something. So, I mean, the ability to pay potentially in any ERC20 token or have developers abstract that entirely away is huge as far as making the wallet experience more practical. And my understanding is that so I think, you'll have to approve transactions in the same way, I believe, but I think you can, it's like, but things like how you have to approve, you have to like approve Uniswap to have access to a token before you can trade it. That's like 2 clicks. It takes a while. I think you can combine that into 1 click thanks to the new upgrade and account abstraction. And I'm still grappling with a lot of it, but I believe it allows potentially your account to just be converted, like the private key aspect can be converted into a username and password. And they can abstract that away. Also, recovering accounts is maybe the biggest one of them all, where it's like you can programmatically say like you can tap these 3 people and they will help you recover your account thanks to this development. I'm still kind of grokking it, as you can probably see, but it does seem like there's a Cambrian explosion of wallet experiences that's coming out of this development as in addition to a couple others. So I think it's very exciting, and I think the super high level takeaway is that we're going to see wallets with much more seamless experiences for users, and maybe much more varied ones very soon. So I think that's maybe one of the most exciting spaces in crypto right now.
Absolutely, yeah, I agree. And I'm not. We had this news on the Unisop wallet as well from last week, but I don't think this actually is a smart contract wallet, right? It doesn't use these like account abstraction benefits. The Unisop wallet.
I'm not sure if they've.
I'm not super sure about it.
Yeah.
Coinbase also announced a like wallet as a service. So this is kind of a like a whitelisted wallet that different applications can integrate to their like front ends, and this doesn't use the new kind of account abstraction either. So I mean, a lot of news with wallets. Some are smart contract wallets, some are not. I think it's I was speaking with someone from Coinbase at ETH Denver, and he said the reason why they didn't do the account abstraction with this product is because it was just too early, and they were kind of waiting to see where the technology is going on with respects to Ethereum accounts. So that's interesting to see as well. It's like for some all of these changes are exciting, but still kind of unproven. So worth noting as well. But but Instadep did kind of jump to that opportunity right away and release this product that does use account abstraction. But yeah, I think, like you were saying, Owen, the bottom line with this news is that the tech on Ethereum is evolving to allow for a much more user-friendly experience. I think one of the biggest roadblocks for adoption is how clunky it is to access crypto in the first place. So like being able to recover your account easily, being able to transact without having to pay in ETH, and without having so many like approvals in the process, I think are really big steps forward to making crypto more usable. So yeah, really kind of interesting developments there. And then we have two kind of big themes that we also covered this week: staking and then NFTs. So I think with staking, the main thing that people are watching is when they'll be able to withdraw their staked ETH from Ethereum, and it looks like there's more clarity regarding that. What's the latest on this? Yeah,
I think next week you're going to see the last testnet, which I believe is pronounced Go. I'm not going to try, but you guys hopefully you got. But that one's going to go girly. Is it girly? All right. Yeah. So that they're going through their Shanghai, which is what the upgrade, which enables Ethereum withdrawals. So they're going through that process next week, and that is the final testnet to go through the process before Ethereum itself goes through the same enabling withdrawal process.
Right. Yeah. So that's what all of the stakers in Ethereum will be watching. It's been a long time since they've been waiting for this. And then there's just more kind of liquid staking vehicles related to this.
Yeah, I think it's just interesting, like that you can maybe hold different LSDs and they will represent, like you can maybe direct some of that underlying yield to various things you like believe in. It's like a form of expressing your values through like which liquid staking derivative you hold, which I think is interesting. And I think we'll see that with stable coins too soon. So.
Right. And then, related to this, Rocket Pool, which is one of the like staking as a service, liquid staking protocols, also had news this week. And the idea is that they will make staking easier. Is that right? With
sorry, I had to unmute myself. Yeah, like if you want to run your own node and validator, right? Like if you want to be part of the real decentralization of Ethereum, be one of the people that's helping to approve transactions and add blocks to the Ethereum blockchain. The financial bar for doing that is like way high. No normal person can just put up 32 ETH. That's like what, like $50,000 of money. So Rocket Pool, like what Rocket Pool does is it makes it a lot easier to do that. Right now, you can put up 16 ETH instead, and Rocket Pool will put up the other 16, and then you can run a node. And so with this upgrade, they're set to have that again. So you put up 8 ETH, Rocket Pool puts up the other 24, and you can run a node. So it's slowly trying to lower the barrier to get into staking.
Yeah. So the idea with changing to proof of stake was increasing the level of decentralization for Ethereum, by making it less capital intensive to run a node. Like with proof of work, you have to have like all this infrastructure. With proof of stake, you just need capital. You just need ETH staked.
Did I tell you when I was in Miami recently, and my last night that I was there, I stayed with a friend at his Airbnb, and the owner came back that night. He's a real nice guy, and he was on a trip actually to New York. We swapped places, and he gets back from New York, and he's unloading his car and bringing all these boxes into his apartment. And I'm like, what's that? And he's like, oh, these are like, mining machines. I was mining Ether. And I was like, oh,
Wow.
business isn't going so well anymore, huh? He's like, nah, the merge. I hate those guys. Environment.
Amazing. Wow. Well, he could sell that equipment and buy just ETH instead, and become a validator.
Or pivot to Ethereum Classic.
Right.
He was like, Ethereum Classic, it's crap. I asked him about that.
So funny.
Yeah, no, I've got his number. I'll text him, and why don't you
See
just
how
start
things are
staking?
going.
Yeah.
All right. Okay, and then last story of the week is what's happening with NFTs. Still going pretty strong, and we continue to see big names making announcements, which you would think that would die down in a bear market, but here we have Amazon, which interesting.
Yeah.
Launching a marketplace.
Yeah. Something that that anonymous punk 6529 said was like, most of NFTs are going to be something like a coupon, and that's always stuck with me. Like, they're going to be little silly things that you use at Safeway to like get cheap yogurt or whatever.
Yeah, I'm always so skeptical when these big names release NFT news. Like, I don't know if they actually will come to something.
You don't like yogurt?
Come on, Cammy, we gotta get some deals. Gotta get some deals at the supermarket.
Do you need an NFT for that? I don't know.
If it's going to get me access to not fat yogurt, which is all Trader Joe's only sells non-fat Greek yogurt in the big tubs, and
dude, I know that's pain. No, I know that pain. Yeah.
I'll get an NFT to fix that.
All right. Okay, I think that's a wrap for this week, and lots going on. Yeah, like biggest news, ETH being a security to the NYAG, trouble at TradFi with Silvergate and Silicon Valley Bank, and dragging all of the banking industry down, which spells trouble for crypto companies banking with those smaller kind of tech-focused banks. So yeah, hopefully everyone in crypto was able to get their cash out in time and find a new banking partner. All right, so that was it for this week, and we'll see you all next week. Thank you so much for joining us.
Yeah, thanks a lot, guys.